thank you for watching my video on land tax. It's just an introduction. There's a lot more to say, but it will give you some of the basics. It's presented today by Catherine Smith, myself. I have a number of degrees and diplomas, including accounting, tax, financial planning, real estate, mortgage broking, to name a few. But more importantly, I've been a passionate property investor for over 20 years. Bought and sold in most states of Australia and made quite a lot of mistakes along my way. So the disclaimer is, of course, this is not meant to be personal financial advice. You really do need to take some advice before you take any action. But what is land tax? It's a state-based tax levied on the land that the property occupies. It's in addition to income tax, capital gains tax, GST. I point that out because it's very important. This is about land tax, but when you're buying a property, you need to consider land tax, but you also need to consider those other topics as well, which I do have other separate videos on. Because it's a state-based tax, it varies in every state, and it can be very confusing when comparing the tax implications of properties in different states. I'll just give you some examples about that, but why consider it? Land tax can be a considerable burden on property owners. The more property you own, the higher the burden becomes. So why consider it? Because it's very easy to minimise. So if you can minimise it, why wouldn't you consider it? Let's have a look at some ways to minimise land tax. You can invest interstate. You can purchase property in a variety of entities. You can buy units instead of houses. You can invest interstate. Now that's not a typo. I wrote that again because the easiest way to avoid land tax or minimise land tax is to invest interstate in different states. Because land tax is calculated on the land you own within a particular state. It makes sense to buy properties in other states so as to spread the land tax values across the states. So investing interstate is simply the easiest way. To give you an example, imagine you owned one or more properties that had a total land value of $750,000. If it was all in Tasmania, you would pay $9,837 in tax. If it was all in South Australia, you'd pay $5,420. However, if one of your properties was in New South Wales and the land value was $350, another one in Victoria and the land value was $200, another one in South Australia, a land value of $100, and your fourth property in Queensland, and it had a land value of $100,000. That's actually very easy to achieve because the land value is a lot less than the property value. If you did that, your land tax liability is actually zero. If it was all in the Northern Territory, it would also be zero. So spreading your investments across states and territories can impact your land tax greatly. In this example, the land tax varies from zero to $9,837. It's almost $200 a week, which is a significant effect in the net profit of your portfolio. You can also invest in numerous entities. If you really do need to buy properties all in one state, consider buying them in separate entities, such as companies, trusts, and self-managed super funds. However, do have caution. Each of these entities has its own pros and cons, and buying in a certain entity just to save land tax may actually cost you an absolute fortune in other taxes. So you really do need to seek professional advice. It also doesn't work in the ACT. And be careful of trusts in New South Wales. Once again, very complicated, seek advice. Buy units instead of houses. Yes, this works, but it's not really recommended other than to reduce land tax. Capital growth on house and land generally outweighs units, in my opinion, and in a lot of other people's opinions. Houses have better tax benefits due to depreciation. Units have no scarcity. That's my biggest issue with units. You might buy a unit in a complex, it's the only one in that area, you buy it for a certain value. 10 years later, there could be 10 other unit complexes right around you, and there's no scarcity. In that case, your unit will have gone up very little. But wait, there's more. In my opinion, your decision as to where to buy should not be overly influenced by land tax. You need to consider it, of course. But the number one consideration should be location, location, location. There are ways to buy where you want to buy in a good location and still minimise land tax. but we need to get far more complicated and consider each entity and in each state to understand more. So if you would like to know more, you could contact me for a consultation, or you could consider having a look at our more complex, advanced land tax videos where I go into far more detail. So what is your investment journey? In my opinion, the most important part of every business venture or property portfolio plan is getting the foundations, the structure right in the first place. Research your options, get advice, get it right before you begin, because those who fail to plan to fail. Too many property spookers throw property down your throat the moment they meet you. I don't agree with that. You need to set up the structure first, prepare a plan, then think about the finance strategy, then find a property. Having said that, we do a property portfolio review for you where we look at how many properties you can buy, how much can you borrow, how much will it cost you per week is often the number one consideration. How should you structure it for tax purposes, company, trust, your own name, your spouse's name, super fund. Only $385, which includes the hour consultation and a discussion about your plans. If you'd like to know more, contact me, Catherine, at wfscanberra.com.au. You can also download our free report, How to Build a Property Portfolio the Right Way, right from the start. The 7 elements to building a successful property portfolio on our website, wfscanberra.com.au. We have a lot of other videos, property versus shares, why property, investment strategies, land tax, finance strategies, tax and rental properties, tax and property development, etc. If you'd like to know anything more about those videos, once again, simply contact myself. But what is wealth coaching? Wealth coaching is, I don't want you to have to learn the hard way through the many mistakes that I made. You can learn from my mistakes and my knowledge. Wealth coaching differs from life coaching. Nothing wrong with life coaches. There's a lot of them out there. But in my opinion, most life coaching needs plans, and the plans often need money. So wealth coaching is looking at life coaching. What do you want to achieve with your life, but also helping you get the money in place to get that plan working. So someone to help you design your financial goals, guide you through each financial decision, guide you through every financial stage, and help you stay on track. And I also have a team that can assist with all the paperwork if necessary. So if you're stuck in a financial rut, if you know there's a better, smarter way to use your money to get ahead, but just aren't sure how, if the information is too confusing and overwhelming to grasp easily, or you just need some assistance finding your way through the maze, contact us to have a look at our wealth coaching packages. We have a wealth breakthrough package, a holistic wealth through property package, holistic wealth through business package. Contact myself, once again, Catherine, at wfscanberra.com.au. So life is a challenge, meet it. Life is love, share it. Life is a dream, realize it. And life is a game, so play it. Thank you for listening today, and I hope you will listen to some of my other videos in this series. Thank you.